Hi, everybody. Welcome back. This is going to be another weekly recap for the week of September 8th through today, Friday the 12th. I will cover the dividends received this week. I'll cover my options trades this week. And I'm showing it in a little bit different view now. That way I can touch a little bit more on some of the mechanics and the specifics of the options trade since I've gotten some requests for that. So I'll break that down a little bit more. And then, of course, I'll go into the weekly deposit as well at the end and what I did with it and any new moves. So, quickly for the new viewers, as always, the objective is to increase the velocity or the speed at which this portfolio grows, not only in dividends and in options trading for income, but also the entire value of the portfolio. Because with that, it opens up more options for me to use for different things to potentially hit financial freedom faster. How am I doing that? I'm using the money that would normally go towards my mortgage and student loans and investing it instead. And then I'm using margin to pay those debts when they're due. How am I doing it as well? In step one, deposit $6,000 per month into the brokerage account split into weekly deposits. So $6,000 split depending on how many Fridays there are in the month. 50% of that 6,000 gets invested into the ticker SGOV as a holding for options trading for cash secured puts and covered calls. 50% gets invested into high yield ETFs, dividend ETFs, and individual stocks for growth or dividends. And then a couple of days before the first of every month, I withdraw $6,000 on margin borrowed against the account, and I pay interest on it to pay my mortgage and my student loans. Any income earned throughout the month from options trading, from capital gains or losses, or dividends received, or any other kind of income gets applied to the margin balance to bring it down throughout the month. So it's constantly keeping it going down and not increasing as fast as the $6,000 per month. And then some of the goals that I won't go over, but you can read them here. So let me jump into the results of the dividends for the week. So on the 8th, on Monday, I received a dividend for GPIX, which is the Goldman Sachs ETF, and I received a total of $10.48. On the 12th, and the rest of it is today, I received my weekly XDTE payment of $98.28, the weekly ULTI dividend payment of $82.22, and the weekly WYMAX dividend of $16.25. So a reminder, these three are weekly payers. I get this every Friday. And then GPIX is a monthly payer. I just happened to get it this past Monday. So total dividends for the month so far, and this says August. That should not say August. It should say September. So for the month so far, you can see in dividends I've received a running total of $550.42. Now jumping over into the options trades. On the 11th, which was yesterday, I set on Mondays after I place my trades. So I place my trades on Fridays, and then on the following Monday, I go in and I set good to cancel orders, limit orders. That way it stays open until it hits a certain price. I set good to cancel orders on all of my holdings, all of my sold calls or puts. So on Thursday, because I had a good to cancel order for $1, I typically set it for $1. It closed on its own. So yesterday, the good to cancel order triggered the 7 contracts that I had of TSLL. So I bought them back for $1 each, paid 8 cents in fees. Let me highlight this to make it a little easier. So they were 7 TSLL put contracts at the $12 strike expiring today. So this closed a day early because it shot up yesterday. It cost me $1 per contract, so a total of $7, and it cost me 8 cents in fees. So it cost me $7.08 to buy back those 7 contracts yesterday. It closed on its own. I got the notification, and then I decided to wait until today to sell more contracts on it. One, because TSL had skyrocketed up. I wanted to see if it would come back down to earth a little bit today, which it did not. It actually kept going up. There was some news around Tesla and whatnot, and it just went a little higher than I thought. I thought maybe it might come down a little bit and it'd be a better opportunity to sell the puts. So it happens. I prefer to sell on Fridays anyways, but I probably could have done it yesterday and got a little bit more premium. Oh well. So then everything else was today. So Rigetti, RGTI, I had a put contract, one contract at the $14.50 strike expiring today because I sell weeklies. I typically sell weeklies on all my positions. I haven't sold anything more than that in a little while. I will on rare occasions, and I'll make sure and go over that. But as of right now, I'm just selling weeklies, typically 7 to 8 days, maybe 9 days to expiration, depending on if they closed early. For instance, like this TSLL position, it closed a day early. If I would have resold the puts on it yesterday, that would have been 8 days to expiration, but I did not, so I sold today. RGTI, so expiring today. I had it from last week. I paid, again, this was a good to cancel order that I had already in, and it triggered on its own. So I paid 1 cent in fees, and I paid $1 to close it. So it cost me $1.01 to buy that option contract back and get out of it. Then on Pepsi, I had a 145 strike put, one put, expiring today. This was from last week when I sold it, and I rolled it today. So at the end of the day, or close to the end of the day today, I decided to roll the contract. These are shares that I would be comfortable holding for the long term. So it was actually in the money. It was at about $143 when my strike's $145. So if I would have let it ride to the end of the day, I would have had to purchase these shares, which I'm okay with, but I'm only going to do that if I can't receive a decent credit. So I decided to roll it because there was still a little bit of premium to collect there. So I paid 66 cents in fees to close it, and I paid $184 to buy the contract back. Rolling a contract in options is simply just closing or buying back one end of it and then simultaneously selling. The reason why you roll is because you typically get better prices rather than buying the contract back and then selling it separately. I mean, you can do that if you like buy it back in the morning and in the hopes that the price comes up or down or whatnot, but I always just find it easier to just roll the contract. So I decided to roll it. So again, it cost me 66 cents in fees, which is the standard that I pay for every options contract. It cost me $184 to close it, so it cost me $184.66 to close, buy back, and do the first half of this rolled contract. And then, like I said, simultaneously, I sold another call on Pepsi expiring 1 week from today. This is actually incorrect. This should be 9/19. So I simultaneously opened a new put contract on Pepsi at the same strike. You can roll to a strike up or strike down or whatever strike, but it affects the premium. So I decided to keep it at the same strike even though it was in the money because I wanted to collect as much premium on it up front right now to lower my total cost basis. So I received $250 in premium. I paid 66 cents, like I said, in fees, and I received a total credit of $249.34. Now, not all of that is profit, right? Because I had to pay $184.66 to close the previous one. So you have to combine these two to see what my net credit was. So in order to roll this contract out 1 week at the same strike price, I paid $184.66, received $249.34. So my net credit that I received was $64.68. To me, that was good enough premium in my eyes to keep rolling the contract to see if Pepsi 1 comes back up or to see if it drops down further and I just decide to take assignment. So I'm kind of kicking the can down the road, but I'm okay with that because, like I said, I would be comfortable owning these shares. And also the premium was decent enough for 1 week that I was okay with rolling it at the same strike. I looked at rolling it down to 144 and getting a little bit closer to where the price was, but I would have received a net credit of like $10, and I didn't see that as worth it. If that happens next week, I could only get like $10, then I might just take assignment and maybe selling some conservative calls on it. I'll report back next week on that. So jumping into the next one, BITX, I've mentioned before, this is one of my favorites. I had 2 contracts last week that I had sold on this. I like doing 2, but because there was some things that happened this week, I didn't have, which I'll get into here in a second, I didn't have as much money to sell options this week. So BITX, I sold 1 at the 53 strike expiring a week from today. I received $48 in premium, paid 66-cent fee, so I received a total of $47.34. The previous 2 open contracts I had on this that I sold last Friday, I let them expire worthless. So I had, I think, a $47 or a $48 strike, Instead of paying money to close it because BITX was so far over it, there was no chance that it was going to get near my strike. I just let them ride. And they will expire worthless, save me about $2, maybe $3 in the long run. Not a big deal, but it was far enough out of the money that I knew there's 0% chance it was going to go in the money and I would get assigned. So I decided to just let them expire worthless and save myself like $3. So that's why you don't see the transaction for the closing here, because I didn't close it. I let them expire worthless. So SOXL is the next one. I've been trading this one quite a bit as well. Sold one put contract at the 27 strike for $19. Paid 33, or I received $33 in premium, 66 cents in fees, of course, and then received a total of $32.34. This is another one that I let just ride. It's going to expire worthless. And then NVDL, this is actually a new position. I've sold it in the past. It's the first time in a few months, but I sold one put contract on NVDL at the 80 strike, expiring a week from today. You can see everything here is a week from today. 7 days typically, 7 to 9, like I said, is what I shoot for. And real quick, I'll jump into, so if it's a stock that I think is really, really volatile, I will sell puts around like the 10 to 15 delta. Consider that a little bit safer. So like TSLL, right? I'll sell that at like a 10-15 delta, which I'll get into here next. And then if it's something that I want to own, that I wouldn't mind owning long term, like Pepsi in this case, I might sell like a 20 or 30 delta so I can collect more premium. It's, higher chance of being assigned, but I'm okay with owning those shares. I'd be okay with owning any of these, but I want to own BITX, SOXL, NVDL, TSLL less than I want to own like Pepsi or Starbucks or any other like Costco or something like that. So I sell them a little bit more aggressively on stuff I don't mind holding like longer term, and then less aggressively on stuff that I want to hold shorter term if I got assigned. So jumping back in, NVDL, I sold an $80 strike expiring a week from today. I received $92 in premium, paid the 66 cents. So my total income on that was $91.34. And then, like I mentioned on TSLL, I had paid yesterday to close the 7 put contracts, right? And then I decided, because the price shot up a lot. You can see I had a $12 strike. It was up near 16 today, around $16, over $16. So it's getting a little higher than I'm comfortable with. So I didn't want to sell as many on it. So I sold 4 put contracts at the $14 strike instead of 7, right? 1 week from today, I received $14 in premium, which is not a lot. Like I said, this is a position that I think is a little high right now. A few months ago, I was selling puts on TSLL when it was up near 17, and I got stuck in it for a while because it shot up on the news like it did this week, and then the following week it dove. So there's a chance that could happen next week. I didn't want to get stuck in these shares at too high of a price. So I sold the 14 conservatively, 10 delta, and received $14 times 4, right? Because I have 4 contracts, and I paid $2.65 because it's 66 cents per contract. So that's times 4. But I still received a total of $53.35 on those 4 contracts for the week. Still not terrible. And then last but not least, Starbucks, which I've been selling for a while. Thursday, or actually this morning when I woke up, I was notified that I was assigned these 100 shares, or assigned this contract. My strike was $87 that I sold last week. I sold the put on, and it was down near 81, 82. So I'm not surprised it got assigned. But I didn't see it until I woke up this morning and said I'd been assigned, which is fine. Starbucks is actually one that I want to own long term. I like the price of it, even at $87. I think this company is beaten down right now, and for good reason. But I think that they are turning the corner, and I think that it will continue to go up in the nearer future. And I'm comfortable holding 100 shares of it right now. I actually don't want them to get called away. And I'll go into what I did in response to that with my deposit in a minute here. But I don't want them to get called away. I actually want to hold these for super long term because I like the $87 price. So I had to purchase 100 shares of these at $87. So $8,700 it cost me to buy these. Subsequently, like I've mentioned, I have SGOV that I use as the holding for my option selling. So because I was assigned these, right, I had to pay $8,700. I didn't want this to come from my margin. So I sold $8,700, or a little bit more. I had to sell like $8,750 of SGOV to cover the purchase of these shares, so it doesn't come from my margin. I want my margin only to be used for paying my debt, the mortgage and the student loans. So I was assigned 100 shares, so I immediately sold a call on these, but very, very conservatively. I think I sold like a 9 delta. It was like between 9 and 10 delta, really conservative, at the $87 strike, which is my cost basis as well. Not my adjusted, but my current cost basis for a week from today. So I don't want these to get called away, but I do still want to try to collect a little bit of premium on them. And in addition to the dividends I'm going to receive quarterly, right? So I received $15. I mean, even if I did that every week, that's $60 a month for holding the shares, right? For something I want to own that I think is going to go up and I'm going to receive dividends for. So I see it as a win-win. So, and then if it does get called away, my strike is 87. My cost basis is 87. I don't lose anything on it, right? And I collected all this premium for free. So one quantity at the 87 strike, expiring a week from today, about the 9 or 10 delta, received $15 in premium, paid the 66-cent fee, so I received $14.34. All in all, I received this week a total of I made $295.30 in options trading. And in dividends, I forgot to cover here. I brought in this week $207.23. So altogether this week, I brought in $502.53. So that brings my running totals for dividends for the month so far to $550.42. For options, $665.01. And for the month total, $1,215.43 with 2 Fridays to go, 2.5 weeks of trading to go. But the back half of the month is going to be counted towards probably October because Wednesday is the first, I think. So, and I usually trade on Fridays, right? So I've got 2 Fridays left to receive dividend payments and trade essentially. So we'll see where I wind up at. I mentioned it's going to be less than last month. There was 5 Fridays in the month last month and 2 misty payments. So totally expecting it this month. So what did I do with the deposit this month? This week, I'm sorry. So this week I put in $1,500, right? Because there's 4 Fridays in this month. I deposited $1,500, which is a quarter of the $6,000. And typically I would split 50-50 between options trading. So I'd buy, roughly $70 or $750 of SGOV and use that for options trading, and then put $750 into dividend ETFs or stocks. I did a little bit differently because I was assigned on Starbucks and had to pay $8,700 and pull that from SGOV and pull that from my options trading money, right? Because that's where I hold it all. And at the time I had like 420 shares, I think, which is a little less than half of the portfolio. Because I had to take $8,700 of that is no longer going to be used for options trading because I'm going to hold Starbucks long term by choice. I wanted to kind of replenish that a little bit. So with the $1,500 that I deposited today, instead of splitting it, I just bought all SGOV. So I bought 15 more shares of SGOV. So that's another $1,500 to go towards options trading. It's not $8,700, but it's a jump start to getting that back into the options trading. I want to keep this as even as possible. Right now, options is taking a little bit of a backseat to the dividends, but all my dividend holders right now, I am in the positive on all of them, which is a great thing. With dividends included, I'm in the green on every single one of them, which I'll cover in a monthly recap in a couple weeks. But because of that, I kind of wanted to hold off on buying more. One, because I had just pulled money from SGOV to put into Starbucks, and that dropped how much I'm able to use for options. But 2, I'd rather not buy at higher prices if I don't have to. I wanted to see if by doing this, the prices on some of those high yield funds and things might drop a little bit and I can get them at a better price. So it was kind of a 2-pronged attack, I guess, at what I wanted to do with the deposit this week. Not sure what I'll do next week. It'll depend on the market. Big news on Wednesday, they are supposed to cut rates. We'll see if they actually do. So the market next week is going to be volatile, which is good for options trading. And then we'll see, depending on what they do with rates, it's either going to skyrocket or it's going to drop a lot, depending on the news. So that's going to set up for some good trades and stuff next week. And it's going to affect what I end up doing with the deposit and maybe some trades and things like that. I will report back on next Friday. And if you guys have any other requests for diving deeper into anything else or any kind of video you'd like to see or something I'm not covering, let me know. Again, thank you for viewing, and catch you on the next one.